Hello, hello. It is Tuesday night with the People's Pride Project, and that means it is time for a couch conversation. Y'all know what it is. It's between talking to your cousin Pookie and the professor. Somewhere in there, we're going to get the knowledge out. So this week, I'm with Carl and Joniel Brown, and we're going to talk about okay, listen. 80s baby 90s raised me. So yes, Life After Death is the Biggie album title. I did it on purpose.
I
Um,
like that. I like that you did that.
but we're going to talk about life insurance and creating generational wealth and really getting some financial literacy and how that can affect not just our families but our communities. So thank you guys for agreeing to do this with me.
Oh,
Absolutely. You're
absolutely.
so honored to be here.
Man, People's Power Project, man. She's tuning in, man. This is a great thing she's doing. Thank you for having us on.
Thank you. Thank you. So we're going to start from the very beginning. How did you guys get involved with life insurance, or even, how did it start making sense to you?
Well, that's a great question because we never thought that we would be part of that. Our backgrounds have nothing to do with it. I have a background. I have a bachelor's in civil engineering, and my wife has a master's in forensic social work. So I was like, how in the hell we got into this? What it really the truth is, I graduated during the recession time. I think a couple of years after the recession hit at '08. Couldn't get a job. Couldn't get a job. Got a degree. Most of the guys was going back to school. But there's a thing called debt. That sounds familiar. I wasn't trying to get into any more of that. So I decided to, play my hand at trying to get some work and trying to build my way, build my life. But when I didn't find work, it really just opened up the door where I had to figure out how to do things on my own independently. And that's kind of like the preface and the foundation. But really, truly, after a few years, I met my wife. Oh, I think 2010, and then things started to take off. We got married in 2014. Got my job 2 years prior, so I'm like, okay, this is good. Got a good job with the city. Boom, boom, boom. My wife is in school. I'm like, that's about to take off, but then we found out that we were still broke after a couple of years. So with the life insurance, what it was, it was just a stream of events. I didn't know much about it. I just knew I should have it, and I had it on myself really before I got married. So I knew I had to do something to make sure my wife was involved with that. So we were actually seeking to speak with our agent, my agent at the time, who we never got in touch back after we got that policy. I called and I called and I never got in touch and kind of just got lost. I just whatever. And but then things started to happen about 2015, and we knew that we need to take some financial steps. And my wife was like, we got to get our life insurance together. So I said, all right, let me call again, and we called, and still nothing. So Joniel's a good friend of hers, actually, she was hitting her up, and they got back together. And she actually was involved in the financial services industry and life insurance, and they actually helped us out. But we didn't know. We thought we would just get what we got. Our kids do get your service. Thank you. As long as it's good, do all the things behind the scenes, and that's it. But we didn't know that was an opportunity in there. We never were looking to do anything like that, but we were also seeking to make some, get some money. You know what I'm saying? We need some opportunities ourselves, and one thing led to the other. And from that, we started doing it pretty much spare time. But then we saw the impact, and we started learning about it. And that's what started to open up the door that people are being, are being affected greatly by this.
We actually had, just to segue into what Carl's saying, we actually had our own personal experience with life insurance and the life insurance industry. And it turns out my husband was insured on his life insurance policy. Now, mind you, we're married, right? But little did we know, my husband is insured, but I was not insured on the policy. I was just a beneficiary, right? Now, the young lady we sat with, she didn't tell us that. We thought we were both insured. So God forbid something had happened to me in the process, I would have left my husband with the student loan debt I got from my master's program and no income, right? Because I never worked a job in this country. I've just been a professional student all this time, from my associate's degree to 2 bachelor's degree and to my master's degree, got into my PhD program. Like the average young couple, we thought we were on track. We were getting stuff moving. And unfortunately, to find out I was not insured. So when I went on Facebook, I was really searching for a job. My husband always worked. I never worked. And I had the degrees, right? But I had no experience.
Call it a career student. Career
Right. I
student.
was a professional career
Career
student. No
student.
one wanted to hire me because I had all the degrees they couldn't pay. And then, me with my master's degree, try to apply for a $10 an hour job. Of course, that didn't make sense. And the interviewer kindly, well, she wasn't kind. She really told me I was taking away jobs from people who don't have degrees and I should probably go search for jobs that I qualify for. And she was not very nice about it. So I went on Facebook venting. Long story short, that's how we met the young lady that sat with me and my husband. And that's how she educated us. She's like, Joniel, did you know you're not insured? And I looked at my husband. I'm like, what are you talking about? That's crazy. Of course I'm insured. We did the policy together. But because we weren't able to afford more at the time, she only put the insurance on my husband because he was the only one working. And that's a case in point for us ladies, right? We have to make sure that we understand what's going on in our household. Whatever our husbands know or partners know, we have to know. It's a two-way street because God forbid anything had happened, my household would have been ruined because there was nothing to secure my foundation in my home, right? And then one thing led to another. I had her look at my mom's policy, and then things just exploded from there. Girl, listen, my mom had a type of policy where you pay over the amount of years and then eventually accumulated cash that you can take from. That's how they explained it. And she took it. She's a Jamaican woman that put her money in something. So
Yeah.
she took it. In 2009, we came to this country, me and my brother. She took 2000 from the policy. Fast forward to 2016 when we actually sat down to review her policy. Let's just say it was 3 times the amount she took out at this point when we learned that it was a loan. Right
Mm.
now, I'm sitting here like I don't know nothing about this. I don't know. I'm a student. My husband is an engineer. I'm a forensic social worker. I know nothing about this. Right. So that's how the young lady came in and she's like, it was a cash value policy. She flipped the policy pages over. She literally showed us in the policy where it did say policy loan provision and the interest rate that she was being charged every month. But like the average person, she never read the policy, So one thing led to another, and we decided, if she made this impact into our household, who else don't know what they have in their life insurance policies? And things propelled from there. Within 2 weeks, we were licensed through the state of New York, and we've helped over 11, 12 families with their life insurance policies.
You know, I would, one of the key things that alarmed us was the fact that most people think they have something and they really don't have much.
Mm-hmm.
It's like you ever hear this? You hear people say, "I got a good job," but what does that really mean? Is it
Right.
they could pay you a certain amount per hour, or is it with good benefits? That's really started to alarm us that people have some. Just because you have something doesn't mean you have quality. And for me personally, I always like to get quality. Um, you cheap doesn't mean much. Quality is better for me, and we found out pretty quickly that a lot of people, most people rather, they don't know nothing about life insurance. This is insurance. They don't know nothing.
And that's why you're here.
Yeah, yeah, don't know,
Most of us don't know anything about life.
yeah. And being educated with a degree doesn't really mean you know a lot of things. Most people don't even know how money works. We deal with life insurance, but we also deal with a whole world round of financial literacy and services. So there's a game. It's a money game. That's the truth. It's a game. It's really and when you don't know the rules, you can't win the game, no matter how you try. And when that happens, you're bound to fail. So our job is to really teach people the rules of the game so that they can know how to make the best decisions for themselves. And it's not one size. There's no one size fit all when it comes to money. Everybody's different. And that's the key there.
I'm just going to rewind just a second because we've only been talking for about 9 minutes, and you've already laid out several good points that I want to go back to.
Okay.
First of all, the fact that even at your age, we think of life insurance as something that happens down the line when we're settled, when we're older, when
Yeah.
personally, no, you have to plan for when you can't plan, right?
Mhm.
So the
Like
fact
that.
that you
Yeah.
so the fact that you had the foresight to know to take these steps, point number one. Most of us aren't. We're running around, we have kids, we're taking care of our families, we have our parents we're taking care of. We're trying,
Man.
and nobody knows the paperwork.
Yeah.
Nobody knows what's really happening.
Yeah.
Joniel, what you said about not knowing and only one party in the family knowing,
Yep.
so many people are living that.
Yes.
Mm-hmm.
Absolutely.
Yeah.
Especially from our parents' generation,
Mhm.
you know, everybody had defined roles in the home.
Yes.
So that sharing of knowledge didn't happen. And it wasn't like an intentional thing. It was just like, nah, I got this.
Yeah.
Right.
Yeah.
So
Yeah.
it's very cliche, right?
Yeah.
Yes.
So to be able to sit down and say, okay, as partners or even as single individuals,
Yeah.
I know what I need to cover.
Mhm.
Most of us don't. So
Yeah.
can we start there with the idea of what should we look to cover?
Go. Wow.
It's great.
That's a
It's
great
really
question.
good. It's really good.
The key thing about life insurance, there's some. I always suggest to people, just think about this. If take our life insurance out the picture, let's just do that. The way we live our life now, most people. I'll give you a quick statistic, right? And this is since like 2019. Nearly 80% of people live paycheck to paycheck. That's an alarming stat. That's a whole nother conversation in itself. So people don't even have enough money coming in the house on average. But let's look at those the moms with the children and all the busy things we do just to get through every 30 days. Let's pretend that let's cut your income. Let something happen to you. And it don't even have to be passing away. It could be just you just can't work.
Right.
Who's going to take care of that income? That's the first thing. And that's the first thing I always ask people. I said, well, what's your plan if, God forbid, one of us is or both of us is no longer here, especially if you have kids and they're young and they're not going to be taking care of themselves financially till 25 at least. They're going to mess around and figure things out. Some might be a little, smarter, more have their head on their shoulders, but you know how young people are. When you're 18, you need a good 5, 6, 7 years, before you start thinking, oh, okay, this makes sense. And so up until that point, who's going to take care of you financially? The income that's been coming in every single month once it's cut. So to answer your question, I said, if you don't have an income protection plan, you better get life insurance. Okay. And then the second thing is that, well, people are in debt. We're taught, I don't know if you knew this, but if I was to ask you, what's the first mortgage that people take out in their life? What would you say? I'm not even going to tell you that. I'm going to see if you get it right. The first mortgage that most people take out.
School debt, I would assume.
That's a great answer. And that's probably because you've been educated enough to. But most people don't know that. They think home, that's the first mortgage, but loans that's the first mortgage. At 18 years old, you sign a dotted line. You don't know what the hell you're doing, and now you're indebted for X amount of money with no guarantee of a job after your college years. No matter how many years they didn't say that as soon as you get out of college, you guarantee the job. They didn't say that in the contract. So now you're already behind the 8 ball, and now you start a family by the time you're 30, and then now you got to get a home and all those different things. So what we cover, you got to make sure you protect your income just in case, and we're talking at least 20 years, and then all the other things that comes with it. What if something happens? Can the same things financially still happen long after you're gone, right? And when people do the numbers in their head, they're like, oh, I'm not covered properly. Right, so that's to answer your question. That's what you got to cover. That's a lot of income a lot of money that has to cover you in that situation.
And then the next thing, I'll definitely go back to the beginning, right? Whenever I sit with any client, right, or anyone that sits in my office, whether they sit to talk about life insurance, whether it's to get out of debt, whether it's just to understand their portfolios, whether it's to roll over a Roth IRA from their job or 401k, it doesn't matter what they sit in front of me to do. The first thing we want to do is to dispel the myth, right, around financial security, right? People think having money or preparing financially or getting a life insurance policy. Listen, I'm Jamaican, okay? And if we're keeping it real, when you're from the Caribbean, it's not a topic we talk about. Let me tell you, when I came here in 2009, my mom had been begging me, okay, to review her life insurance policy from the company she had. Now, granted, if I reviewed it, I didn't know anything about it anyway. But in my head and my lack of knowledge, my ignorance, I told her, I'm not reviewing no life insurance policy. I don't want you to die.
That part.
Mm-hmm.
I don't want you to die. So I'm not reviewing that. I feel like if I filled out those paperwork or if I talk about it and if it becomes a topic, it means, oh, I'm wishing death upon you, or
Mhm.
yo, I'm if it dead. That's like a common phrase in my culture, right? I kill your wife, kill me. No. The fact remains, we don't know when our last day is going to be. So we're not putting a negative stigma on life insurance. We're educating because we have to protect the next generation. So it's not about us. It's not about myself. It's not about Carl. It's about my son, Marquise,
Yeah.
right? What does he have? Does he start where we left him, worse than we left him, or better than we left him? And at the end of the
100%.
day, we have to, every generation have to be better. So let's just take the myth away, right? Oh, you're not supposed to have money, the root of all evil, all that stuff. Come on now, right? We having real conversations. So when we sit with any client, the first thing we want to know is, what does that even mean to you? What does financial security mean to you? Why do you even want a life insurance policy? Why do you want to be financially successful? Right? We know why we want to get out of debt, because we don't want to pay the bills anymore. But the main thing, the foundation, is understanding your why. Understand why you do it. Why do you get up every day and go to work? Why do you continue to run that business? Right? It's all these whys. But at the end of the day, we have to make sure, we have to make sure that the foundation is in place. And the first foundation in every house, well, in your financial house, that's life insurance. And then you build upon that. You add the will. You make sure the will is in place, right? And then you continue adding to make sure your financial security is taken care of. College saving plans for the kids, right? A Roth IRA for retirement. We do all that for our clients. So it's just taking away the negativity, taking away the cliche and the old time
Mhm.
stigmas surrounding financial wellness. Just like mental health, your financial health is also important.
Let me add to that real quickly.
Go ahead, because I was getting ready to say so. Go ahead.
Yeah, there's one thing that most people don't understand. When you look in our history, especially in our communities,
Mm-hmm.
people of color can, we ain't coming to the next generation with money. This is quite honest. If you know that we actually make more money than ever before,
Mm-hmm.
but statistically we don't have nothing to pass on. So I always ask people, I said, well, we are actually teaching people to eliminate the need for life insurance. And here's what I mean. If I sat with you and I said you got $500,000 sitting around stashed away somewhere, we don't really need to talk about that life insurance. We need to talk about how we're gonna get that money working for your next generation. Now you may get something, decent for maybe estate planning or whatnot. But there's a lot of people don't know about the larger industry, the insurance industry. We're actually exposing a lot of myths that you're supposed to be dependent on it for the rest of your life. That's not true. We're supposed to be using it as a tool to build generational wealth, just in case we don't make it, we don't live to see the point of I save millions of dollars or I have all these businesses and real estate, whatever it is, just in case I don't make it, because I don't got nothing right now. I don't got two pennies to rub together, but if I can buy some Jordans, I can get some life insurance. You know what I'm saying? Because if anything should happen, look at the greats. Let's be real. Let's look at what we buy. We're the biggest consumers, okay? And we know that, guess what? People are dying like crazy, right? From all kinds of situations. So if we were to at least get that position, life insurance, which don't cost a whole lot, it don't. You know what I'm saying? You do that, and then you attach something to save and grow with investment and strategies with that. 30, 40 years from now you got something to pass on, regardless of what happens. And if you don't live to see that, you still got something to pass on.
Absolutely.
And you have a plan. And the problem is 70% of us do not have these conversations in the house. All we talk about is barbershop talk, who's the best player, who's in the celebrity world, who what's the gossip, what's going on. But nobody wants to have those uncomfortable conversations. And because, as my wife is saying, they're uncomfortable dealing with the fact that the guarantee is that we're going to die.
Yep.
That's guaranteed. Until otherwise, I need to know guaranteed what's going to pass on when I die. Not if, when. So I beat to cut you, but I hope that.
No. You're good.
Yeah.
But that what you just said is part of the reason why I wanted you guys to come on this week, because last week was our discussion of death, and none of us are making it out of this sucker alive. We know this. So, as people of color, as a community that has often, and this is reiterating what I've said last week, often our relationship with death comes from trauma or a sudden something.
Oh yeah.
So we don't get the chance to plan easily, or oh well, granny's getting sick, so let's make sure. No, so and so got shot, so and so got an accident, something out of the norm that we're not prepared for. And then comes the grief, the drama, the cousins and the aunties that want to show up and act up, raiding the house, selling off the good stuff. And in the midst of this grief and turmoil, we lose sight of everything, and we lose the ability to prepare. So having the education and the understanding that you guys are affording us, it's not just about money, it's peace of mind. It's recognizing that, you know what, I'm good. We're good.
Yeah.
And what you just said about buying Jordans, because a lot of us, okay, what's the money? What's it going to cost us? And if you can afford a $200, well, let's talk some real numbers. Because if you can afford $200, $250 for a pair of sneakers, and that's on the low end. I know what shoes.
Absolutely.
Why can you not see yourself as creating a safety net for yourself and for those that are coming after you? And something that was said about, we have this fear of speaking it into existence. Oh, if we make sure that everything's taken care of, we're going to make it happen.
Yep.
You're gonna die anyway.
No matter what you do, it's gonna happen.
Exactly.
That's the truth. Listen,
Absolutely.
That's the truth. That's to the point that you made. I'm trying to remember specifically, but the numbers of if you can create a safety net. I don't know if you know this, and I really, a lot of the work we do, there are certain situations it's challenging to salvage for those that didn't do the right things, unfortunately. But what we can do is our goal is to really impact a lot of the younger community to understand that time. Okay, a lot of people think the biggest asset that they'll own is, most people, and I've done this. We've done this millions, thousands of times. We train and we say, well, what do you think the average person's biggest asset that they'll own in their lifetime? And most people might say a home, right, or some type of property, right? Because they look at the numbers as hundreds of thousands for a house, and if I could get a house and blah blah blah. And I said, okay, that's great, but think about this. Time is something that is more valuable than anything. And what do we do for the average person does for 30 to 40 years? We trade our time for money. So therefore, what do we spend most of our time at? Working for somebody else, right? There's nothing inherently wrong with that. But if we're going to do that, we got to understand that we don't own that time. And two, if we don't own that time, how much time do we own? And what are we protecting with that time that we have, which is usually a little bit left, or maybe 15 to 20 years of retirement. And once you flip up that switch, because it's going to happen, old age is going to kick in. We young, we still, I'm starting to feel a little something. I'm only 33, but I already know some go kick in. We just seen our parents retired. I'm like, I know. So I'd rather be ready. If you're going to follow that pathway, you better make sure when you turn off that switch, you better have another switch or switches ready to turn on.
Right.
That's the problem. So the biggest asset that we own is the ability to earn or to grow money. And when we don't know how to maximize that and protect that, okay, because we don't know what tomorrow holds, So we have to protect that with life insurance while we have a game plan and invest in and grow in all the diverse ways of bringing in the income and holding that. That is going to stabilize us. Not here's another thing to a cultural thing that we found. Do you know that a lot of people really, and it's sad to say, not a lot, but many people, they have the mentality, oh, they're gonna take care of themselves.
Very common.
This hurts
Very
my heart,
common.
because how can you tell me, oh, I don't want them to benefit of my death?
Yep, we've heard it so many
You know how
times.
many times I heard? I said, what?
So many
I said,
times.
so okay. So how about you give me all your money then if you don't want it to benefit your debt? Because even if you don't have life insurance, if you have $1, they're gonna benefit because by law it goes to your next of kin.
Yep.
So how you even want to benefit off your debt? And I always ask this person people a question. I said, what if your parents before they passed away, they had left you $1 million? Would you be saying that right? What would life be like? You wouldn't be struggling. So don't tell me that you don't want to leave behind nothing for your kids. You want them to take care of yourself because they're going to squander it. Well, there are things in place in which to make sure to do that. You know why? Because the two people with the 2% of wealth, they figure that out.
Right.
The Bill Gates of the world, I'm pretty sure they figured that out. And I know that for a fact. I actually had a great opportunity to experience this, and they told me verbatim this stuff. So when I tell you that a lot of cultural things, as you said, the trauma, we have a lot of things we gotta re-teach and relearn. And education is the powerful thing. But people usually say knowledge is power. I actually don't believe that. Application of knowledge is power. And when we do that through what we teach in life insurance, as basic as that, it changes a lot of things. And then you add all the layers that Joniel said. So that's the real stuff. It's sad, but we have a lot of work to do with that.
A lot. But that's actually I love everything you just said. And that's a major part of the reason why I have these conversations, because we are the generation that can flip the switch.
Absolutely.
Yeah. We're the generation that has enough access to information, that has, the traditionalism and everything that comes from our parents.
Yes.
But we're moving farther from the stuckness and the lack of knowledge. And I'm only doing what my parents taught me. Like, you don't have to do that anymore.
Man, I've heard that a million times. You even know.
Because a lot of us didn't know any better. And we tried to teach ourselves, and we weren't able to have the education. Right. And we didn't have people that looked like us that were willing to not take advantage of us and get us in places to really set ourselves up. And now that we have these opportunities, I want to share them with everybody.
Yep.
I'm like, y'all hear the secret. Come on.
Yeah.
And that's exactly how I feel like we should look at it. And so people tell me, like, this is very common, right? So we've been talking a lot about individuals with children, individuals with family members and all that good stuff. So I've had situation where someone will sit and talk to me about making extra income or getting rid of their student loan debt or something like that. But they're like, oh, no, Joniel, I'm not into that life insurance thing. First of all. And then I would say, okay, that's, I understand the expression and everything. But tell me more. I want to hear more. No one is ever the same. No one size fit all. So I always like to hear people's perspective. And I hear things like, I'm single, I don't have a house, I'm too young, I don't have kids. I'm like, okay,
that's hard to get it.
Okay. But you do understand life insurance is based on three things. It's based on your age. The younger you are, the absolute cheaper it is, right? Your health. And based on statistics and all that stuff, the younger you are, the healthier presumably to be, right? And then, of course, what you can afford. Now, if you're young and healthy, it's cheaper, so you can afford it, right? So they'll tell me, oh, I don't have children, I don't have responsibilities. And then I always ask the very fundamental question, especially to a lot of the millennials and the generations after. And I'm like, God forbid something's supposed to happen to you right now. It doesn't even have to be death, because we always think it's the worst of the worst and it's final. It could be a disability. It could be a terminal illness, right? There are insurances that cover stuff like that, right? What if something is supposed to happen to you? Who takes care of that responsibility?
Cricket.
Oh, you don't know?
Every time.
you have this student loan, you have all these debt, these credit cards. There's something called revolving debt, right? A lot of that, we won't go into details on that, but a lot of things, even God forbid you pass away, they don't go away. There's certain debt that just don't go away. They roll on to the next of kin. You leave nothing behind. Who takes care of that responsibility? Right? So it's not just you need to get life insurance. Make sure you get life insurance. Come get some life insurance because it's cheap. It's educating and understanding the importance of it, but then also what does it do in the event that you're not there? What does it replace? Insurance can never replace a life, ever.
Never.
Cannot, right? But it's one thing to grieve and have that emotional stress on you and not have to rush and worry about money on a funeral and the body and the parlor and how long you have to pay for it, and you can't keep it that long because you have to pay per day and there's no money to take care of that, and then you got to jump on a GoFundMe and have that stretch all the way through, versus you're grieving but you understand that there's a check sitting right there. The money is not going to bring the person back, but it's the emotional time that you can spend grieving and actually planning for a proper funeral, and having the freedom to see, to do as you see fit in your time frame, when you want to have a funeral, when you want to have a burial, if it's going to be here back home, because now you have that flexibility because that foundation was secured. And that ranges from any age group. That's across the board, right? And we talk about young people who don't have children that have that perspective, but best believe they're adults with that same perspective as well. They don't have kids. They have nobody they care about. Nobody that you care about. Nobody that's going to cry. God forbid you're not in the picture, right? God forbid you meet in an accident. Who's going to take care of your estate, right? You have businesses. Who's going to take care of that? Nothing lives on after you. Okay. And there's some rare occasions that we don't do business with people because of the mindset and because of the mentality. And unfortunately, there's only so much that you can educate, but you can't force people to change, I guess. You can only give the information and pray that it would be of substance.
There are so many considerations that you just mentioned that most people don't even think about.
Absolutely.
Don't even think about. Forget the fact that we don't want to discuss or challenge our own mortality, but the idea that certain things last longer than we do, whether we want them to or not.
Absolutely.
These decisions that we're making, setting up our lives, can still haunt those that are left.
Absolutely. Yes. 1,000%.
And for a lot of people, that doesn't click. They're like, well, when I'm gone, it's over. It's
That's
just
it.
It's not.
Oh yeah.
And
that's, man.
We can tell some horror stories with that, but we ain't gonna go there.
But the education that's necessary for them to recognize what needs to be done. Like let's blank slate. We can talk about me. I'm confident in my shit. I don't have life insurance.
Hey, what?
I don't. I know. It's a trap. This was one of the reasons why I wanted somebody on here, so I had what the fuck to do.
There you go.
So someone like me, say blank slate. What do I do? Like how do I start? How do I know what's the right policy? If I only got, Walmart nickels to rub together, can I even afford life insurance? Talk to me, because I don't know shit.
What the simple is, there's a saying called that people don't plan to fail, but they fail to plan. So every person, the conversation is what I kind of alluded to it. Well, first and foremost, you got to see what you got. You have children, great. Okay, well, you work a job. Okay, well, that's the easy part. We know what you financially bring in. So the first thing is we can assess what you need in the event something should happen and how long you need it for. Then we're going to ask you what you want, because I'm pretty sure you ain't going to work every single day just to clock in, clock out. I'm pretty sure at some point you have some goals you want to achieve. Everybody has some goals, big or small. So that there's a financial quantity attached to that. But a lot of people don't visualize it.
Mm-hmm.
They don't. We're not taught to write down our goals. That's
Right.
another thing. But
Yeah.
we have to do an analysis. We got to put it down, pen to paper, and we got to visualize it. This is what. Not that you're worth this. They call it net worth,
Mm-hmm.
but your goals has a worth to it. Your dreams have the worth to it. Your current situation has an actual worth to it. So in order to protect it, we got to know or quantify exactly what it is that you actually need. Then we say, okay, well, what can you put away? Because obviously we ain't gonna just talk about need for life insurance. You need to save some money. So if you got two pennies to rub together, the first thing is you need more money. That's the real talk. I'm not gonna talk about life insurance and you barely bringing in no money. You need to make some money.
Yeah.
That's the number one thing. I alluded to it. Nearly 80% of people live paycheck to paycheck.
Mm-hmm.
So what our model is, listen, we got to help families earn more income. However you want to do it. I said, listen, do you have other ways to bring in extra income? XYZ. That's one of the reasons why we build a team the way we do, because like how we was in that position. We're like, well, yeah. And that's the realness. Now, whether people take heed to what we're saying or not, if you need income, that's the first thing we got to check on. Bring some extra money. Now, listen, there's all kinds of opportunities out there. Okay, we in New York City. You can't tell me you can't make $1. There's all kinds of ways, right? That's the first thing. Get that going, and then we can quantify. Okay, listen, let's get you on the game plan. So we said, well, listen, if you could commit to putting XYZ away, and when I say put money away, the question I ask, we call it an itching pocket. You know how we put some money away and then we want to take it back out because something happens? I don't want that kind of, I want, what can you put away without thinking about it? I don't care if it's $25. That's what I want to find out. And once I find that out, I said, can you consistently commit to put this away like you don't know that you got it? And once we come to that term, that's when we talk about, okay, based on what you need, you may not be able to get everything, but it's better. You don't got to be great.
Somewhere.
You don't got to be great to start, but you have to start in order to be great in anything. That's the biggest part about that.
I got questions though.
Mm-hmm.
So for my $25, can I do something with that, or do I have to wait till it becomes more before? Like, if I'm like, yo, I can do $25.
So first of all, that was a hypothetical number, right? For
a
grown adults.
I want to know how it works.
Listen,
I was trying to be a little cute for the kids.
But to allude to Carl's point and to yours, right? One of the things that we do, as Carl was saying, he's talking about it because we don't have a whiteboard to write it out, but literally we're writing out in front of the client, and we do what we call a financial needs analysis, right? That literally tells you, not based on what Joniel says or Carl says, it's based on cost of living, inflation, all that stuff. This is where you are right now financially. This is what you bring in. And based on those lofty goals, because people like to talk a good talk and talk about their goals, but this is what we need to do between here and here in order to accomplish what we're going to set up for you, right? Now, if we're at point A, and let's say you bring in, let's throw some numbers out there, $2,500 a month. Your bills are about $2,000. You have $500 left over, but you're not seeing that money at the end of the month. It means there's some miscellaneous spending going on right there that you're not keeping track of. No one is budgeting anymore. We have a card, and it's so convenient. Swipe, water, fruits, this one, that one, shoes. Oh, that's nice. That's nice. Shiny eyes everywhere we go. We make $2,500. The bills are $2,000. Where's the extra $500? We don't know where it's going. So we put our clients on a game plan, and we say, okay, for the next month, right? So maybe we're not able to start something right now, because the last thing we want to do is to set up a financial game plan. The client's on board in the beginning. Emergencies happen all the time. There's no emergency fund allocated. There's no savings in the bank account. So we're not going to give a client something they don't qualify for at the time. But what we're going to do, we're going to work towards it. So maybe they say, oh, of course, Joniel, maybe I see 200 left over. We're not going to take that 200 to set up the game plan. Let's say we split that in half. We take 100 and we set that aside. Now, on a monthly basis, you're bringing in $2,500. $100 is like, what, $25 a week? Right? We want to take that $25 a week, and we're going to set that aside for your financial game plan. In that game plan, we're not only doing the life insurance coverage, we're making sure we set up some type of savings account, and we start a retirement account, some type of money sitting in an account that will just grow for the life of the clients. So they say, oh, I can use $100 for that. I can use $50 for that. You can, But let's just say you're not going to start based on the financial needs analysis. You need about $300,000 worth of life insurance coverage, but that's going to cost you $60. Based on $100, we can't give you that amount right now because you can't afford it. Let's bring you all the way down to maybe 50,000 to start there. That's about $40 a month. Throw 25 in your mutual funds, right? Maybe $10 over here for your savings. So we're keeping you at 100 or less because we want to make sure you can continue this game plan. Now, over time, we're going to sit and say, okay, what can we do, as Carl alluded to bring in some extra income? The one income isn't working. It's not going to cut it. You're going to retire and you're going to have to go back to work. We're not here to fluff a client up on an appointment, but we don't want them to feel too bad either. But we have to tell them the truth, right? You cannot afford life insurance right now, and that's not good. You have 3 kids, you have 2 kids, you have a house, you have a mortgage. You would be surprised. There are people that bring in over 6 figures on an annual basis and still can't afford a financial game plan. Girl, fix your face, child. Oh, yes. I can sit with somebody bringing in 30,000 and set up a better financial game plan sometimes versus someone that brings in 6 figures. It's not what you bring in, it's what you keep. You make 100,000 at your job, but that's before taxes, sis. What are we talking about after taxes? You don't take that home, right? Let's have a real conversation. So you might be making 6 figures. You feel good about yourself. That's awesome. But you're bringing in 80 or 75. Your bills on an annual basis, when we calculate it, that's about 55,000. What exactly do you have left over, right? We need to bring in some extra income, and every client is different. Every person is different. But what's synonymous with everyone is that we always need to make extra income. We have to protect the foundation, which is the life insurance, and we have to set aside some savings for a rainy day, an emergency fund, a short-term saving, a retirement account, and we help our clients to do all that.
Let me add to that real quick. But we talk, especially. I'll use our situation because we've lived this. Okay,
Personally.
When you know how we work multiple jobs, especially Caribbean folk, 4 or 5 jobs, and then we don't know where the money's going. You know what I'm saying? It's a lot to. It's a testament to the lack. We think working more means making more.
Right.
It really isn't.
It doesn't.
The more we make, especially working for somebody else, the more taxes you're going to pay.
Boy.
And the more time away from your family at that. So the pennies or the nickels that you're able to rub together, most people in this, we've never found a situation, really honest, where somebody can't put away something. Why? Because I know people consume things, because everybody has cable.
Cut something off, cut something down.
I've literally helped people. I said, listen, do you watch all them 1,000 channels? Do you have to pay $200 a month for the cable bill and the bundle deal? Bill. You know what I'm saying? Can you cut it down a little bit? Can you cut it down $50-$60 and talk about some savings and life insurance? You don't got enough time to watch TV.
Yeah.
You know what I'm saying? Phone bill. Oh Lord.
I'm so tired the TV watch you.
So once we talk about people that ain't got no money, that's not true. That's not true.
Yeah.
The census of 2020 says the average person can save, it still sucks, but can still save $200 a month.
Yep.
So I already know there's money somewhere. If I say, well, you buy coffee every day, how much you pay for coffee every day for 30 days? If you spend $5 on coffee, that's $150 a month. 30 days. So one time you can't find $50 to get a life insurance policy, something basic. We started like that. We had $150 a month. And we opened up 3 savings accounts, two individuals and 1 joint, and we got a life insurance policy for like $55.
Okay.
Now we got over $1 million plus coverage on me and my wife, because we found a way to earn extra income, which is what we've been doing since. Because we realized, based on our financial needs analysis, in order for me to hit the goals and retire the way I want to, and all the things in the future, which we wanted to retire by, 52, 53. Which most people think how you gonna do that? Well, think entrepreneurship. Let's start with that. Hint, hint. Right? I realized my job is not gonna pay me what I want. That's just me. All right. So I had to do something about that. So that right there, we realized they said I would need to be saving $1,500 a month at an interest rate. I believe it was around average of 9% over the next 30 plus years. I was 27 at the time. in order to have $5 million saved. 5 mil. Now, how many people know? How many people even think that far? You know that people get excited for 100,000 saved by retirement, and then they realize that's not enough to last 20 years. Cost of living, ding, ding, ding. Have you not experienced that before? A bag of chips, when it's coming like 5 cents, 10 cents. Now it's what? $1 for a little bag that's half air.
Crazy.
So people don't think like that. I said, dude, it's going to happen. So you can't work all your career, save 100,000, where 45% of Americans have 25,000 saved. Imagine those that have 100,000 saved. That don't last nobody. You need to. I call it the $1 million plan. I appreciate. I say, listen, if you make 50,000, I use the averages. Take home rather. Make and take home are two different things. If you take home 50,000 and you work 20 years, that's $1 million that you took home. 20 years. So if you retire by 65, let's use that, and you live till you're 85, that's 20 years. And you turn off that switch. You think Social Security and pensions going to take care of you. Let's be real. It's not going to do it, especially for our generation. And they're telling you, Social Security, we don't know what's going to happen. We got people living on pensions that got it cut. What do you do when you depend on that? Yeah. And you don't have something supplementing it, or at least be 100% independent, and that just be extra. Mm-hmm. That's the goal, to create more financially independent families. And if you don't got two pennies to rub together, the least you could do is secure. If I die, there's $55. Man, that's gonna make sure my wife clears all her master's debt, so that at least she go.
Don't die.
You know what I'm saying? That's the least that I could know, in peace of mind, right? So. My $55, okay, is 2 pennies compared to the wealthy, but my $55 is going to take care of my wife. She got no debt. At least I can
start where you can.
Start where you can.
That's it. Start where you can.
But the average person, let me tell you this, they can put $80 to $100 just for life insurance.
Sure can.
Because let me tell you, people can do it. Don't nobody can tell me otherwise. Now there are specific situations where, well, you just need more income, so let's get you more income, and then let's get $100, and boom.
Yeah.
You can't tell me if you could work. If you got to work something and they don't even give you extra $100, what kind of job you working? You gonna put in extra time for $100 a month? Come on, they at least gonna give you $500. You know what I'm saying? Like, let's be real here. So find something to do, even if it's extra time. Now you got Ubers and Lyfts and all kinds of independent contracts and stuff. Do something. You could do DoorDash.
People start their own businesses in their homes selling.
There's all kinds of ways. So that's the least of our worries. It's just that people don't value. You see, if you don't value it, you're not going to pursue it. If you value your car, if you value your house, if you value your phone more than you value life insurance, that's the problem.
Insurance on everything else except themselves.
You know what I'm saying? Verizon is not going to pay your family when you die because you've been faithful paying their bill. You've been faithful paying the Verizon bill. Oh man, I got to make sure I pay the Verizon bill so I can keep the cable on or the internet on. But you can't be faithful to your own kin to say, well, I got to make sure that life insurance is paid for, that investment is put away, and much less pay yourself. We rather pay our bills first than pay ourselves first. That's another thing, but that's a whole other conversation.
It's all about self-introspection. You have to sit down and have that real conversation with yourself. And especially if you have kids depending on you, family members, your parents, you have a home, you took out that mortgage, right? You have to sit down and really just think for a second, right? Just think for a second. You don't even have to be out the picture. You can still be here. We've seen it happen just too much, actually, in the pandemic, where people just lost their income just like that. That's a light switch.
Then they calling us.
One light switch.
You was right, Carl. Let's set up something.
The one light switch they had was their income, and they never in a million years. I've had people in so prominent positions who never thought they could be indispensable or dispensable or whatever that word is, right? They never thought they could lose their job. They never thought they could get furloughed or stay at home or all these different things. And that one light switch got turned off, and it turned their homes upside down because they were only dependent on that one income. So that's another thing too. You have to set aside that rainy day fund. And people say, oh, I got it under my mattress. I got it in the piggy bank. I got it in the bank account. Check your interest rate. Check your interest rate on that bank account. And if you're not averaging at least a 3% in these accounts, come on now. You're not making no money. Your money's not growing, right? That's not enough to set aside for a rainy day. And if you keep touching it, touching it because you have the itchy hand.
Mhm.
That's not an emergency fund, man. That's just a regular account that you keep going into. We got to have something set aside for a rainy day, because it's not if something like the pandemic last year is going to happen again. It's just when.
Yeah.
And you can't get caught off guard like the last time.
You guys have touched on so many points, and I'm going to get back to it in a second.
Mhm.
My people, when we have these here couch conversations, I tell you how to grab a notebook. I tell you how to grab a pen and a pencil. This is why. Because we let y'all know what the real is. These will be replayed. They're available on YouTube.
Mhm.
Get you a pen and write this shit down.
Yeah.
Anyway, one of the questions that I was going to ask you, and you briefly touched on it. You know what? Forget that. We'll get to that in a moment. A lot of the nuances that we're discussing is a lot of our cultural issues and how they play out with how we relate to money.
Unfortunately. Yep.
The idea that we can't have or we shouldn't have, or the instant gratification, or trying to keep up with things that we really have no business messing with,
Yeah.
just to say that we have XYZ or we're just as good as.
Mhm.
And we've been taught kind of to reach for these things and ignore where we should be focusing on.
Yeah.
And I love how you guys both broke down life insurance not as the panacea, not as the end all, but part of a larger
Picture.
wealth program.
Absolutely.
Mhm.
Because it's not, oh, I got my life insurance, but what are you doing?
Yep.
Mhm.
Yep.
You know, and that leads into the question that I had. Can it be used prior to death? Are there ways that having these policies can look you out,
I love this one.
you know,
Tell you this one.
beforehand?
Woo. So you mentioned the stigma, the culture of how we think of life insurance.
Mm-hmm.
So I implore or impress upon everybody to learn about how the purpose of life insurance when it was created. Do some history with that. Life insurance, and this is actually by law, okay, is not an investment. It was never created for you to have a gain while you're living. It was never created for that. Okay, it was created to restore, or the word is indemnify, okay, what is lost financially due to death. Okay, so that's the first thing, right? So a lot of people always come to me, can I take from my life insurance? That's a common thing. Can I take from my life insurance? It's not an investment from that standpoint. It's not for you. Okay, it becomes liquid when you take your last breath. That's what it's for. It's for the living, right? So what you're essentially doing is you're protecting the value that depends on you while you're alive right now. That's the first part of it. But we're not wishing that. We're not thinking about that. We just know it's going to happen. I don't know when it's going to happen. You just got to protect and guarantee that there's a transfer of actual liquidity of money when you take your last breath. So you know my kids is going to be fine, at least financially. What they do after that, that's you gone. So you don't know what to do. Now, in terms of and we definitely going to talk about there is a wrong and a right type. You know, we'll get to that in a second. But in terms of can I use it while I'm alive? Yes. And in a lot of ways, that's how a lot of people, a lot of industries or a lot of companies in the industry use that against us. Okay. And they try to treat it or teach us to use it in a way like it's some type of investment vehicle. It is not. It is supposed to be for pure protection, just like how you insure your car, you insure your phone, right? You don't be asking, hey, do I got a savings plan attached to my phone? Do I have a savings plan attached to my health insurance? No, you pay premium to cover for a service to protect you just in case something happened or a loss. Same thing with life insurance. So, but in the way that is the right way, okay, there is one situation where we talk about when you know pretty much you're gonna go, and that's a terminal situation. Okay, and we'll touch more of that in a second. That is a case where you find out, okay, I know I pretty much got this much time. Unless some divine intervention kicks in, you know you're going. That's when something can kick in, something we call accelerated rider, where you can actually access for the purpose of whatever you need to take care of your affairs Okay, and then you have a portion to, go to your beneficiaries for, right when you do go for that purpose. Absolutely. But you see, when it comes to us, I'm like, no, we need to have that twofold game plan. This is going to protect you, but we need to find some money that you can put away.
Mm.
Okay. The flip side, you see, a lot of our people look down on insurance, like, you're an insurance guy. I'm like, let's just start with this. They make more money than you. You know what I'm saying? They make more than the average person. Let's just start there. There's money in it. Trust me. Let's go there. But that's not beside the point. When we look at the fact that if I told somebody, oh yeah, I'm an investment advisor. Ooh, you can help me save some money, right?
Right.
That's the first people want to know. I want to save some money. I don't want no life insurance. I just want to save some money. I say, okay, well, let's look at this scenario. Let's pay $500 a month for whatever for 2 months. $1,000 saved, right? You pass away. How much your family get? Okay, 1,000. I say, okay, well, we're gonna do this $500. We're gonna give $100 to a life insurance. Let's get you 300,000 or whatever you can get, and $400 a month. You die in 2 months. How much your family get then? $800 plus 300,000. Which is more? So don't tell me you don't want to talk about no life insurance, because I ain't gonna have the conversation about no saving. We ain't gonna talk about no life insurance. And my question: do you got life insurance? You gonna talk about saving all day and having millions of dollars 30 years from now? I don't know if you're gonna live 30 years from now. I know you're gonna die at some point. So you got life insurance, and then we talk about, do you have the right type or the wrong type? We're gonna go into that in a second after any questions you have.
And then there are also riders that you have on the policies, right? So some policies have riders, some policies don't, right? I know there are terminal illness riders, as Carl was mentioning, that are on some policies. And, that's a terminal illness situation where, God forbid, the doctor say you have 6 months to live. And there's several times where the client has beaten the odds and they recover. And then you continue on with your life insurance policy. All right. There's also disability riders you can get on your policies. But don't let the riders cloud your judgment. You can get a rider anywhere. You can get a disability policy separate. You can get a terminal illness policy separate. That's a loophole that a lot of insurance companies use to sway clients. Oh, you get the cancer rider and the pregnancy rider and the disability rider. There's situations where we sat with clients and they think they had life insurance coverages, but it's not life insurance. It's a dismemberment insurance, meaning if you pass away in an accident, your head got to go with your hand, your foot got to go with your toe. You can't have a heart attack before the policy, and it's in the policy. But they say, Joniel, I'm good. I have life insurance. But because I'm not a sales agent and my husband and I were not in the sales business, I mean, it is a sales business, granted, but we're not here to sell you something. I'm here to educate you. So I say, listen, I understand what you're saying. That is awesome. I'm here to learn, just like you're here to learn. Let's see what you have. And then they pull that policy up. Sometimes it's a paid up insurance. Their savings is paying for the policy and they had no idea. A couple months later, the policy lapsed and they're like, Lord Jesus, what happened to my insurance? Turns out they weren't paying attention. Or they had the dismemberment policy, or it was just they call it it's like these policies that cover like cancers and scleromas and all these different things. Like a disability, conditional insurance, all these different things. There's so many different types. You have to pay attention and make sure you have a pure life insurance coverage. And then, of course, you make sure you back that up with your savings and your emergency funds and stuff like that. So back to the main thing. Yes, there are riders that you can use while you're alive, but just make sure you're focusing on the purpose of the life insurance and having your savings and investments all separate to make sure that, God forbid, anything happens to you, your family's getting paid everything and nothing is staying with the company.
I've heard some horror stories about that.
Oh, child, we can write a book.
And there's only two types. I mean, a lot of this can get confusing for the average person that doesn't really, we've studied and we've done we're in there. So, how we educate, we simplify money, we simplify things. Okay, so kind of that can segue into when we teach people about life insurance, and you're about to get a little education on that. There's only two types. There's, you might see all kinds of different variations. There's only two kinds. There's a kind that many of you might have heard, cash value, and term, right? And there's always this old age debate, which is better, right? But you'd be surprised our response, because the first way or the first side of cash value, I simplify for them so that logically I want them to come to a conclusion if that makes sense for them to even get. You know what I'm saying? So, and this is how we break it down. We say, well, okay, let's say you have some money. Let's say $10,000. All right, and I use this as a scenario of the bank. If you go to the bank and you say, "Hey, I want to put this and open up an account," and they say, "Great, great, let's do it." And then you say, what if I come back 6 months later and I would like to withdraw 5 grand?" The first thing they tell you is, "Well, you don't have access to your account for the first 2 to 3 years." I asked the client logically, would that ring some bells? What? The accessibility logic, like you can't access money for 2 or 3 years, and then worse, you look in your bank app and you see zero balance. You're like, "Where my money at?" I ask everybody that 100% of the time they're gonna be like, "I don't like that." I said, "Okay, good. That's one scenario." The second scenario is this: if you do have access to it, let's say after 3, 4, 5 years or whatever, this whatever 5 grand you want to access to it, and they tell you, the teller tells you, "Hey, listen, in order to access it, when you signed the contract, it was no longer your property; it's now our property. So in order to access it, you need to what? Borrow it. We can give you a loan against that money, and you can take that, but you probably got to wait up to 6 months for it." Ding, ding, ding. No, that don't make no sense. Third scenario, I said, "Okay, what if you die? Does my family get it?" And they say, "No, you do not. We keep it." So all of that money goes to the company or the agent that gets paid for that. So if I ask those three scenarios, nobody want that kind of situation. Well, I just described cash value. The only difference I didn't add is that part of the money you pay for that, part of it pays for this cash value situation, and part of it pays for the insurance. And you know how you see this is the part where I find in our communities, we love bundle deals too much.
Right.
We love them triple play stuff. You know, that's how they sell it. Look at the commercial. They sell it. It's usually one good product, the other is trash. They have to unload those products and sell it. It's business. Let's get it through our head. It's business, and insurance is a business. And we try to tell them, yes, I'm all for getting paid, but at what cost? At whose cost? You know what I'm saying? We all trying to get money. We all trying to take care of our families. But I've sat with agents, okay, who have the right kind of policy, but sell people the wrong type. The one I'm talking about. Yes. Because they make more money. Let me tell you, we on couch conversations, right? So, all right. You see me? If I need to know that what I'm selling people, what I'm giving to people, I have first. If I don't like it, I'm not talking to you about it. If it don't make sense to me, I'm not talking to you about it. That's just an integrity thing. And a lot of people, because they get caught up in money, they'll do the wrong thing just to make some money. Right. And that's another thing. That's a cultural thing. We're just trying to get money, but not understand how it affects people. Okay? If our communities who are underserved and underprivileged, check this out. If we all had life insurance policies at a basic level, okay, and let's say something drastic happened, God forbid, knock on wood, something happened, and let's say there's 1 million people of our color and in the community, and all of us had 500,000 policies, 500,000 life insurance, and all of us went like that. How much money is going back into the community? Look at the economic shift that happens just because of a simple decision of getting some life insurance when my little two planes can't rub together. And then if we live long or whatever, and God bless us, and let's say we all pass that, and we had $1 million saved up XYZ, what happens then? We pass on something. So that's the truth about that. There's two types, and the wrong type is cash value, because it's like we have this water bottle, and you poke a hole in the bottom, and then you're trying to drink all the water. You ain't gonna get all the water. That's a simple way we break it down, and obviously we throw some X, Y, and Z to really show that. But the other side, the flip side, is term. But here's the thing: it's not just that. You have to supplement that. People say, "Oh, which is the life insurance? Term versus cash?" I say, no. Term with a savings and investment game plan for your future is a whole lot better than cash value. And the reason why, and last thing I'll say, the reason why cash value is the way it is, it was designed specifically to hurt the average consumer. It was designed to hurt us.
Mm.
Why? By law, insurance is not an investment. So the cash value is actually the company's way of saying that's my insurance against you dying. Think about this. Your cash value will never exceed your life insurance death benefit, and you will have to wait usually until you're 100, the permanent one, the whole life, and the variable life, and universal life, and all those ones. So you will never save more than what you have in your life insurance investment, your life insurance policy. It will never supersede that. So if you're trying to save $500,000 and you got only $100,000 life insurance cash value policy, your cash value will only go to 100,000, and you got to wait till you're 100.
Mm.
And let's say you die and you had 50,000 cash value, 100,000 life insurance. Guess what? They'll pay out the 100,000, but they'll keep the 50,000. How much did they really pay your family? Only 50. It's their leverage against you because they know you're gonna die. It's
you gotta
business.
guarantee something.
They gotta guarantee something. They don't really want to pay out. Let's be honest. They don't want to pay out. They don't want the responsibility to have to pay out, but they know they're gonna have to, so they want to minimize the risk. That's why it costs less when you're young, and they don't want to insure people that's unhealthy and older. Okay, so we are actually trying to eliminate the need for people to need it, right? But we know there's a problem. We need it. So 30, 40 years from now, we ain't gonna need life insurance. We're gonna have millions, we're gonna have our own money, be self-insured. How about that talk? But in order to get there, we got to take the step first. And we partner with the company that allows that. We say we're gonna help people to eliminate the need for it. Get your money, get your own money. Let's help you save and grow, bring more income and everything like that. Let's have this policy in place though, just in case anything happens too soon. So at least we can pass on to the next generation so they don't have to need life insurance. Now you can want it. We're gonna want it just because whatever wealthy people do it, do what they do. But that's the truth about that. But there's two types. Cash value is wrong. It's wrong. It's the same.
I appreciate you saying that. But the thing, I'm having a little brain fart right now. It's funny to me how life insurance and insurance in general, for the most part, is a touchy subject in our community.
Yes, it is.
But we built the insurance industry because it started to insure us.
Yes, it did. Yep.
They're not ready for that conversation. That's a different.
Oh no, we want to have that conversation real quick.
Talk about it. Talk about it.
Insurance. You want to talk about all the big players?
Yeah.
You want to talk about why they're here? They enslaved the Negroes.
Okay.
The boats. So that massa could say, "Well, I killed them by accident, but I still want my value."
Yep.
That's why we have
1,000%.
insurance.
1,000%.
All these big name companies that we still know today as the major players, they came off of our back. So the very least we can do is get our coins from those that built them on us.
You preaching now?
That's all I'm saying. That's all I'm saying. Get your money.
Get your money. I mean, look at it like this too. Let's look at the numbers. I mean, let's say you pay $100 a month for 30 years. Let's say you get that for $500,000, whatever it is. I mean, you're not even paying nearly the amount that you're getting. That's like if I say, give me $10,000 cash right now, I'll give you $300,000. I'll take that deal 100% of the time. Yep. But you don't got to give me a lump sum that's paid over a 30-year period. That's time, the asset of time to give you time to build more money. So eventually, guess what? You don't need it.
You just put yourself on layaway.
Listen, man. We tell people just like that. Listen, man. We want to, and there's no people don't talk like that. Let me tell you that. Mm-hmm. You know what I'm saying? We want to. I'd rather you come to me and say, hey, listen, hey, Carl, Joniel, I got about $500,000 to send there. I don't want to do it. I'm like, okay,
we like that conversation.
We can. There's something called Rule of 72. Google it. It's free information. Mm-hmm. Okay, we teach that too, right? Tells you how long it takes your money to double. All right, we could use that and double your money in 6 to 10 years with the right type of investments and opportunities. That's easy. But if you ain't got no money, we gotta get you income and we gotta get you protection, right? That's a foundation. Before we talk about the $25, $100 a month, they ain't gonna do nothing for you in 2 years. No matter how much interest you get, you get 12%, $100 a month. It's something, but it's not going to change your life in 2 years. Right. So you have to let that grow, give it time, which a lot of us don't have patience. That's why we go for the quick microwave stuff. Mm-hmm. And then we go for the cheap stuff. We think, it's cheap. I can pay $10 a month for life insurance. Okay, you pay cheap, but what you get? They say you get what you pay for. This is not food. This is not buying food like McDonald's. This is your financial future. Yep. Why would you treat your financial house like that? Why would you want to be cheap with that? Get quality. you know. But
You right.
it's the truth, man. Sometimes people ain't ready for that, but we gonna say it. That's how it is. That's it's just sad. It's just sad, but we have a lot of work to do.
We do.
And that's the least we could do, and show people the way. Um, we've seen in many people's lives, it has blessed them. Sometimes they don't. And you mentioned something about how we have a relationship with money. Um, I kind of pinned that in my head to bring it up again because we have a poor relationship with money.
Mm-hmm.
And because we have a poor relationship with money, that's why our situation is the way it is. We value other things more than so we need to reevaluate and heal our relationship with money.
Yeah.
If that makes sense.
Absolutely.
We have to do that. We have to look at money differently. We value the bill collectors more than we value ourselves because we're so used to the bill collector. Before we say, hold up, I'm more valuable than the bill collector. How about I put at least 10% to myself first before the bill collector take anything else? But we say, no, I got to pay these bills, and then what's left? Then I'll figure out.
9 or 10
that
times
means you value the bill collector versus you.
Yeah.
But yeah.
And that's all fear. That's fear that's been trained.
Absolutely.
Fear of not having.
Absolutely.
Fear of lack. Oh my God! Like, listen.
Absolutely.
Hustle is a hustle is a hustle.
Mm-hmm.
Yep. Absolutely.
Mm-hmm.
So everybody need it. I would say, are you gonna die? You need life insurance.
Who don't need it? The ones that won't die.
The one that won't die.
Who are they? We'll find those people at.
But I hope that answered your question.
Oh, absolutely. And if I'm going to be completely honest, I would love to have a follow-up. We could do a whole series if you want. Like, y'all could teach classes. This is what I do. We're in community. We're educating. Listen, y'all my friends.
Yeah, listen,
yes,
it's free. Let me tell you,
this
just a quick plug. It's free education. Okay?
Free.
You see, a lot of people. We can't afford financial advice. We're financial advice. A lot of people can't afford them. Just to, why would I need to charge somebody to give them the information that they need to know to make a decision on some financial services? Pay for the services, but get the information free so you can make an informed decision. That makes sense. Why you got to pay me to give you the information?
And then don't have the money
to start doing anything
or work on the plan that we just discussed.
You know what I'm saying? So I'd rather you get the information and then you can make an informed decision. And then we say, okay, well, these are the services that you can use to help you to get there. And then we coach you through it. Our real job is to coach you. It's not a wham bam, hey, you got some life insurance and some investments, see you later. No, it's a lifelong relationship. That's the goal. And it's sad, even when we try to build that, some people don't value, again, they don't have a good relationship with money. So they think of things until an emergency happens. Like we had a situation, they didn't even remember that they had the little savings set up, and they was panicking. I said, well, you got X amount of money there. And she's like, oh my God, now I can get through the next 90 days. I said, that's exactly why we told you to, with your life insurance, and do that a little $100 a month. Don't devalue.
You don't think it's gonna add up, but over time that baby adds up.
But because you see the typical guys on the Wall Street, the big companies that cater to the wealthy 2%, they're not coming in our neighborhoods. We are.
Right.
We got the same licenses and credentials. We worked our butt off to get it, so that we can talk to people like you and say, hey, nobody else is gonna do it. The banks is all around us. They ain't coming outside and say, who can I help today? And they look all nice to your side. You ever see a bank? It's like 5 banks on one corner.
You used to enjoy those hot chocolate.
You going in a hot chocolate, and so
and they have the candy on the table.
Great, but ain't nobody teaching you how to become free. Nobody's teaching you how to become financially independent. Look at the last 50 years. Look at the last 10 years in our community. I could talk in just America, but in our people, in our communities, where nobody's doing it. So somebody got to do it. And I'm like, that's what sparked our passion when I realized, hold on, I got a degree. My wife got a master's degree, and we ain't know about our own money like this. And if we got that, imagine those who don't. We know people with doctorates. They don't know nothing about no money.
And we didn't just take the information and just say, oh, yeah, sign me up. Oh, yeah, sign me up. Oh, no, we did. We looked into it. Right? I still have not received a response from a certain bank after I found out about the Rule of 72. I had quite a decent amount of money in that bank account that I was saving in over time because I did a lot of internships and some were paid, some were not. I never had jobs, but I saved my money. And I went in and I asked about the Rule of 72. When I learned it at one of the conferences, they tell me my money is now growing. I'm getting like 0.1%, and I needed at least 3%. And I checked my statements. I didn't understand anything because it was very confusing at the time. So I went into a certain bank and I asked them, I want somebody to explain to me the Rule of 72. The teller couldn't do it. So she sent me to the back where the people with the nice suits sit around the desk, and they bounced me from one agent to the other, told me a supervisor's coming, a supervisor's coming. Mrs. Brown, we're going to get to you. And I sat there, I promise you, about maybe over an hour, and no one addressed my concern. No one told me about it. Let's just say the next 24 to 48 hours, my money was out that bank and I invested it ourselves, because you can invest your money yourself. You don't have to go to all the fancy classes and all that. And I'm not knocking fancy classes. Please go get educated, right? But when you're educated, apply the knowledge that you learn. There's so many entrepreneurs out there learning about the money game, teaching our community, right? Take the information, right? I'm not going to get too biblical, but the Bible talks about leaving an inheritance, not just for this generation, but your children's children, right? We have to make sure the poverty cycle ends with us and we start that wealth building cycle. We start that generational wealth, transcending that to our children and having them learn and passing it on to their children and their children's children. So when they look around the big mansion that you left behind and they see your two pictures right there, me and my husband, and they're like, "Oh, who are those people, Marquise? That's my son, right?" They're like, "Oh yeah, those are my parents, right? They're the ones that built this home and left all these estates and secured a financial home for us and passed on generational wealth that he's going to pass on to his children and they're going to pass on to theirs." But it starts with us. It starts with those two little pennies that we have rubbing together, right? Start where you can and work your way from there.
And we got money though. Let's just be, our people, we got money.
We do.
We said, just to clarify, we ain't broke.
We ain't broke.
We're not.
That's right. We not broke. Like I used to think that, oh man, our people. I'm like, no, we got money.
There is money in the melanated community, my friend.
Look at our neighborhoods. And look at a store at every corner, every block.
We're just not allocating those funds correctly. That's right. See what's coming up right now. You see around this time right here, right? You see this holiday season. This is where we get it twisted. This is where financial households go into ruin. And what do we look forward to? Tax time to make up the difference, right? But listen, it's going to be some shifting happening this next tax season, but we're gonna just let that part play itself out. But Thanksgiving, Christmas, Black Friday, hey, remember, it's America, right? You live in a capitalist society. Pay attention.
Right? Getting distracted by all the shiny, pretty things.
Child.
Wow.
It's crazy.
It's a decision that people got to make. That's it. And once you do it, it's not a hard decision. It's just we got to let go of our pride and think that we're good. And we just realize. I think the first thing is the mission of what's the thing we do when you admit that you have a problem.
Right. You have to accept what you don't know. It's okay to not know, but don't.
Absolutely.
You know what I'm saying? Just say I don't know and I want to know. And it only takes really 30, 40 minutes to just pay. Like, we know people, you're not going to pay attention to our life insurance policies and all this stuff and paperwork. We're going to get busy. But take 30 minutes to an hour, sit and just learn and get the knowledge and make a decision and know that I made a good decision. So even if I don't forget about it, you know what I'm saying, and I don't read whatever, at least I know that I'm good. I have everything in place, and we have to be 100% invested in our financial success.
Have to.
The employer is not going to be.
Pay attention.
Okay. You might have 401ks and all kinds of Ks and 403Bs and whatever it is.
And even to that point, just throwing it out there, right? So many people got laid off and furloughed and weren't able to go back to work. You took the stapler out the desk. You took your jacket out the closet. You took them boots you had hidden under the desk. Do not leave your 401k at your job, and don't leave those retirement accounts. Roll them over.
A lot of people leave their money.
Roll them. Take your money. All right.
They leave their money there. People got money.
Don't leave your money.
They got money. They just don't know what to do. They get panic and all kinds of stuff. But there's money if you look properly. If you look in your budget properly, right? You'll find things.
You'll be so surprised.
You'll be very surprised what you can do.
I had no idea.
And with the opportunities that's around, we gotta humble ourselves to be like, I gotta do what I gotta do to get to where I gotta get. Don't. One thing we realize that opportunities, there's an acronym for poor people
passing over opportunities repeatedly.
Right. You're passing opportunities
repeatedly. Poor
mindset.
In my chest.
You know what I'm saying? That's a mindset.
It hit us back in the day.
You can, as you said, you can have hundreds of thousands of dollars but have a poor mindset.
Yep.
But you can have a little bit and have a wealth mindset.
Deserving mindset. You deserve to live a good life. You deserve to have money. You deserve to have choices. Mm-hmm. You deserve to not struggle and not have to worry about feeding your children versus paying the rent. Mm-hmm. You deserve a good life.
Ownership, man.
You have to believe that in yourself first. I'm not preaching. I'm just telling you deserve it. That's it. And then go work at it.
That's how we talk to our people, man. That's the kind of this, in that growth, man. That and you realize that people crusade with that, when you're real with them. We don't have financial professionals talking like that, looking in people's eyes and saying, you know what, you can make it. People cry, people have all kinds of emotions because it's like, oh man, I didn't know, and now I know. At least I don't have to look at it like a mountain.
Right. Steps, baby steps.
You know what I'm saying? And that's what it's all about. You could be a basket weaver, you could be an astronaut. Mm-hmm. Just know the money game. That's what we actually know, the money game, right? A lot of the information is free. You cannot, this is one thing I learned. It's kind of harsh, but I'm gonna say in terms of our people, if you want to hire something from us, put it in the book. Read something. It's the truth. I'm like, read something. Educate yourself. You don't need to spend money at a college necessarily to educate yourself. I've been more educated in my life than I've ever been going to college. This is my truth, from my perspective.
Yeah.
I've been way more educated in the last 6 years than I've been going to school for 20 plus years. So I'm grateful for that. I'm blessed, but I know there are others. As you get something, you have to be givers. And I think if we have that community mindset, like I said, we always work with communities, churches, and we know we're going to be okay. We can sleep at night knowing that we help a person and say we took care of them. Make a little something, but everybody has to know that it's okay to not know, but it's not okay to know and then not do something about it, or know and then not know something and then not do something about it. So. I hope that helped you on that point.
I think this has been a fantastic couch conversation.
Man.
I truly, truly appreciate you both sitting down. Usually I only keep people for 60 minutes. We have to go above and beyond.
I'm
not even mad at it. I'm not even mad at it. And I've already decided I'll have you back. We can talk about teaching classes because this is necessary, and the way in which you guys break things down makes it accessible, makes it relatable, and it takes the big scary boogeyman out of it.
Oh yeah.
And that's what a lot of us are up against because we don't know, or we've heard the horror stories, or we hear the negative, and it's like, what can I do? I only have so much. Right. Well, that so much that you have can turn into so much more if you know how to use it the right way. Mm-hmm. Yeah. So I thoroughly, thoroughly appreciate you guys for coming by. And
thank you for having us.
Thank you so much. It's a pleasure, man. I'm so glad. We support what you're doing. Yes. Couch Conversations, man. We love it. We need more of this. This is a great thing, an avenue to really let the people know. So we support the People Prize Project. And,
absolutely.
Anything you need from us.
Anything. We're right here.
We're right here.
Yeah. It's already in here. We're making it happen. Because that's what we do.
Yeah.
Authenticity, autonomy, and community. That's what this is built
Woo!
on. This is what I stand on.
Yes.
So we're going to make some stuff happen.
Let's
Absolutely.
go. I love it.
So this has been another Tuesday night with the People's Pride Project. You have just sat and absorbed a fantastic couch conversation. Go while you can, hit up the replay, take your notes. Let me run the email one more time. If you want to reach out, you have questions, talk to your people. That's why they're here. And we'll get back with y'all next week. Thank you so
Thank you
much.
so much.
Right.
Love.
Thank you.